Hello traders, Greg here with a market update. Okay, so yesterday we had the first Reserve Bank meeting in Australia for the year. Australia's got an inflation problem, pushing back up towards 4%. They have to hike, they did hike, it was expected. So they took the cash rate back up to 3.85%. But look, the market was expecting more of a dovish hike in that the RBA would come out and say that the hike was more of a insurance policy, and that that maybe just now be patient with any more movement on the cash rate. But that is not what happened. The RBA came out with an actual hawkish hike, in that they upgraded their inflation forecasts. And they also kept a hiking bias. So that was a bit of a surprise to the market, the fact that the RBA was as hawkish as they were. And so now the market has repriced their forecast for the RBA policy rate for the end of the year, and they've taken it all the way up to around about 4.2%. So that basically means the market is pricing in at least another RBA rate hike at some stage this year. So look, the Aussie dollar loved it. Aussie dollar was trading around about 69.50 early yesterday morning before the RBA decision. Trade as high as 70.50, so that is super close to the 2-year highs that we've seen the Aussie up towards 71 cents. But certainly, look, the Aussie is now one of the strong links in the currency space. There's not too many central banks out there that are hiking rates and got a hiking bias. The differential between the Fed now is blowing out to 35 basis points in favour of the RBA and the Aussie. That's something we have not seen for years, since before COVID. And certainly, if the Fed does cut rates and the RBA obviously raises rates, that differential is going to blow out even more. So look, that's going to be a tailwind for the Aussie. And so any time that risk is doing well in the market, Aussie is going to fire up. And any dips, I would suggest, should be bought in the Aussie, because again, it certainly is. At the moment, the strong link in the currency space. Obviously, the ASX didn't like the RBA rate hike, and we've seen that lower. I would suggest that ASX for the time being is probably a sell on rallies. Anyway, look, we did see some action overnight in markets, and that was basically kicked off with some geopolitical risk coming back into the market. So overnight, the Iranians sent out a drone on a reconnaissance mission, surveillance mission on the US Abraham Lincoln. It's probably their way of basically telling the US that if bombs started coming in their direction, that they would be targeting and trying to sink their boat. Not good. Anyway, one of the US fighter jets did take that drone out of the sky. But in any case, look, the market is starting to get worried that obviously this geopolitical risk of a confrontation, a war between the US and Iran is real, and it could happen sooner rather than later. So yes, that did certainly give the markets something to think about. Crude oil, that spiked up, back up towards $64, so that was up about 3% last night. Look, for the last month or so, crude oil obviously has been trading on the back of this geopolitical risk. It has been a great a great buy on dips, and I would suggest until the dust settles on what is happening with the US and Iran, the crude is going to be trading above $60. And obviously, if something did happen, we could see it spike sharply higher. So look, I would not be selling crude anytime soon. Buying dips, again, the bias. The other commodity markets, gold and silver, roared back to life. Obviously, safe haven like gold loves geopolitical risks, loves wars. and gold went all the way back up to almost 5,000. That is a long way from the lows of the week at 4,400, up $600 from the lows of the week. Phenomenal moves, up about 6% on the day. Silver did even better at one stage last night. It was up a whopping 10%, closed up about 7%. So look, yes, precious metals are back and back in a big way. Unbelievable stuff. And yes, look, being long precious metals again is working, and I'd suggest it looks like it's going to continue to work. So the lows that we've seen in that washout end of last week and early this week look to be now a base from where obviously we're going to go back up and probably test those record highs at some stage. In the equity space, yes, we saw some risk off last night on the back of that geopolitical news. Nasdaq and S&P were down 2% or so at one stage overnight. Struggling, but late in the session what we did see is in the US just before the close, the US government did vote to end the US government shutdown, and so we did see equity markets rally back well off the lows on the back of that news, but still Nasdaq was down about 1.5% and S&P down about 1% on the day. So we saw some classic risk off overnight, but one market that certainly, and we've talked about this quite a few times, that has been struggling, that is Bitcoin. There's been no love for it. Bitcoin overnight did get smashed all the way down below 73,000. It's the lowest it's been for 14 months. And Bitcoin literally has erased all the gains from Trump's initial inauguration. So yes, Bitcoin certainly is the weak link in markets. It has been for some time now. I'd imagine now Bitcoin next sort of target level on the downside at some stage is 70,000, obviously psychological level. If it breaks that, I'd imagine we're going to see some pretty severe liquidations and could see it sharply lower again. So selling rallies on Bitcoin certainly is the way forward. It has been paying exceptionally well. Look, the markets are moving. They are dangerous markets, so you need to be careful, focus. Got some profits on the table. Definitely taking partials is something that definitely would suggest, and keeping stops tight. Anyway, good luck with your trades, and we'll check back in with you shortly.